All right, all right, all right. Hello, everyone, and welcome to the Dividend Power Hour, our weekly live show where we talk about everything stocks. Could be dividend stocks, could be growth stocks, could be macro. We're just bouncing off ideas. I'm going through my weekly update. For those of you that are out there that are regular to the Dividend Power Hour, welcome back. For those of you that are new to the Dividend Power Hour, welcome here. My name is Mark Rushin. I am a CPA, and thank you guys so much for spending this time with me today. Let me know where you guys are tuning in from. Let me know what are some of your latest buys that you've had in the past few weeks. I was out last week. We did not have a power hour last week. I was sick. I'm still on the tail end of that. I think I managed to get two sicknesses in two different cold strands in a matter of 2 weeks. So it's part of having some youngsters in the house, but we just get through it. So let me know in the comment section, where are you tuning in from? And what are some stocks, ETFs, whatever it is that you may have bought in the past week? I see Jim is in the house. I see Graham is in the house. Hello to you, Graham, Jim, Matthew. Good to see you guys. Who else is out there? And where are you guys tuning in from? We got Jeff from Minnesota. Awesome. Great to have you. Oh, back to back. Look at that. Drew and Jeff, both in Minnesota. Great to have you guys tuning in today. Have you guys bought anything lately? Jeff from South Carolina. Good to have you, Jeff. I almost thought that said Cook, South Carolina. I was going to say Jeff Cook from Cook, South Carolina, but James from Vegas bought some O and some Vici. The J made it in time. Los Angeles. Love it. Look at that. Off work, 4 o'clock on the West Coast. South Africa is in the house. Awesome. Great to have you. We got Dennis, or is it Dennis or Denise from Georgia? Don't want to screw it up one way or the other. Another Jeff. We got a couple Jeffs in here now. New Jersey. What part of New Jersey, Jeff? I grew up when I was younger, visiting a small town called Maywood, right outside of Hackensack. I guess would be one of the larger cities nearby out there. We got Mike D tuning in from Massachusetts. Bill from Pennsylvania. Sweden is in the house. Andreas. Good to have you. Singapore is in the house. Look at us. The Dividend Power Hour is going international yet again. Jim is from Nebraska. Sold some positions. And the winners in proceeds distributions were Vici and Maine. So adding some yield to Jim's portfolio. Maine announced a special dividend as well. Didn't see that, Jim. Thanks for the update there. Trevon bought some Hershey's. Awesome. Equinix and some Realty Income. Oh, someone's been watching some of my videos potentially because I've covered a couple of those and I like all three of those stocks right there. Awesome. Jeff Hansen bought some HWM and some DraftKings. Germany is in the house. Look at that. We got Singapore, Sweden, Germany. We usually have Denmark too. I haven't seen my Denmark friends yet. We got Florida in the house. Brian's fresh off potentially watching the Daytona 500 out there. Jeff bought some SCHD, some FTEC, and is right outside LBI, New Jersey. Awesome. Well, great to have you guys, and keep those comments coming in. This is intended to be just a full-on give and take. You know, what are you guys looking at? What am I looking at? Different ideas where we're all just investors looking to build wealth, whether we're investing directly in dividend stocks or whether we have some growth stocks. Again, you guys know me. I am first and foremost a dividend investor, but that doesn't mean I turn a blind eye to growth stocks. You know, we have NVDA. Although it doesn't pay a dividend, it's a dividend stock, primarily a growth stock. No one invested in NVIDIA for the dividend. Most people don't invest in Apple, in Microsoft, in Visa even for the dividend. But the dividend growth is what we like to see there. So, you know, we're just a bunch of friends here looking to build wealth and see what others are seeing that maybe I'm not seeing and you're seeing. We're all trying to bring ideas here in the Power Hour. So great to have you guys. Let's get started bringing up our macro information so that you guys can see what am I seeing in the markets right now. So in terms of a markets update, here's our regular economic update slide. The Dow Jones on the year is up about 2.5%. Last week, or the last time we met 2 weeks ago, it should be, it was pretty much the exact same. S&P 500 though is 4.5% on the year compared to 3.9 a few weeks ago. The Nasdaq's up 4.2%. Last week was 4.9. So we have seen a pullback in a lot of those, but as many of you probably already know, with NVIDIA's earnings coming out today, that is likely to change here in just the next 24 hours here. So the S&P 500 has taken the lead slightly. Although it's likely to go up tomorrow, the NASDAQ could push a lot further because NVIDIA is pulling up a lot of those AI, a lot of those technology-related stocks within the NASDAQ with it tomorrow. So we could see a nice sizable move in the market tomorrow if things hold up like we're seeing after hours here. And then we got the Russell 2000 we like to look at. And there's been, definitely a bit of a disconnect when it comes to those small cap stocks. That's really what the Russell 2000 focuses on there. Between the S&P 500 and the small caps there. So small caps generally not going to do well if we're headed into a recession. However, if we skip by a recession and start to get into that expansion mode, that expansion phase of that next economic cycle per se, then that's an area to look for some good growth, a good catch-up trade, I should say. So the last time we did the Dividend Power Hour, they were Russell 2000 stocks were down nearly 4%. Now look at them. They've clawed back to being down less than 1%, looking to change and turn the corner there and hopefully get into the green coming up here very soon. So looking at valuation, we got earnings estimates out for the S&P 500. And right now, based on those estimates, the S&P 500 is trading at a forward-looking, based on end of 2024 estimates, of about 20.4 times. So a little bit rich, but that's something we've been accustomed to for the past 12 months. Historically, over the past 10 years, we've been right around 17.5 times. That's just regular price to earnings estimates for the entire S&P 500. So we're well above that right now. In terms of interest rates, those have actually crept back up. We got the 10-year at 4.32%, and we have the 2-year at 4.67%. Last time we met 2 weeks ago, we saw the 10-year at 4.1 and the 2-year at 4.5 almost there. So we've seen some movement higher there with rates. Earnings season still going on, and we got a big one today when we're going to be covering it. We got NVIDIA. In the past few weeks since we last met, we've seen Walmart, we've seen Home Depot, and yesterday, hopefully there's not many of you out there, but we got Palo Alto. That one took it on the chin here. So we're going to look at what's going on there. The report wasn't all that bad. It was the earnings. It wasn't about what have you done. And we've talked a lot about that. If you have attended this Dividend Power Hour for some time now, it's right now less about what you've done for me and more about what are you planning to do for me in the future here, because they beat on earnings, top line, bottom line. Billings were a slight miss. Forward guidance, though, sent the stock tumbling, to put it lightly. In terms of jobs, we have jobless claims at 212,000, a 1-month low there for that. Unemployment still hanging in there. The job market is still hanging in there, even though we continue to hear reports of layoffs. The layoffs haven't been sizable, but we've started to hear this, getting a trend of more and more companies that are starting to lay off more. But unemployment still sits at 3.7%. And the number of people collecting unemployment rose to 30,000. And that brought the total number up to just shy of 2 million people collecting unemployment. We have seen a rise in interest rates. So interest rates crept below that 7% figure last time we met. Now we're seeing them well above 7% again. A 30-year mortgage sitting at 7%. You got low inventory, high mortgage, a lot of new first-time buyers, which I mentioned before is a big portion of that, of the home selling process, the home buying process, I should say. So you got low inventory with these high interest rates. Your dollar just doesn't go as far as it once did. So I think, we're embarking on this spring selling season, which is a very important time for the economic cycle and housing in general. Not expecting much fireworks there in terms of that. That's just my opinion there. So let's take a look. Let's see first on the comments here if anyone else is buying anything that I missed and who's tuning in from anywhere. We got Massachusetts. I see Florida. What else we got? NVIDIA is dominating the world. Aren't you right there, Paul? I mean, that's probably even putting it lightly. We bought some SCHD, some XLE, there's some energy there, and utilities. I like it. I like that energy play. I think really energy is one of those misunderstood sectors right now, and I think there could be a lot of value to be unlocked there in the next 6 months or so when it comes to energy. How do you feel about ABL and APD right now from Mike? Not as familiar with either of them. Air Products I've looked at, it was probably been about 6 months, and we got that big drop off. I'm assuming that they did earnings, so I haven't looked at the latest earnings there. Is it, who asked that one? Mike. So I'll have to look at that one and get back to you. But that is a sizable drop over the past year. The stock's down about 20%. You get a 3% dividend yield in terms of growth, about 10% 5-year dividend growth. It is obviously a dividend aristocrat there. So I don't think the dividend's in trouble, but something I want to look further at there. We got Shiva from Fort Worth, Texas. First live session. Great to have you. Love your content. What's your view on buying some Palantir and some SOUN for the long term at the current price? Palantir, that one has just been that one's been very volatile. It's been good for some folks that got in at the right time there, and it's just had that big jump. What was that? Start of the year, right? If I go to Palantir, down 3% today, but look at that after hours, we're up 5%. I think they're just connected with AI, and anyone that's connected in any shape or form connected with AI right now, your stock's pretty much doing good. NVDA is pulling all of those stocks up. AMD, no issue today. They didn't issue any reports, no real news today. But after hours, stocks up 4% because NVIDIA reported solid earnings, blowout earnings, I should say. I can't word it too lightly there because of how good they have been there. So let's see what James has been buying REITs, financials because of the interest rate. But now my portfolio is unbalanced. Should I keep buying REITs at a discount or wait until interest rates start going down? So James, that's kind of been the name of the game. Are we getting too early into this REIT thing? I like to carve out roughly 15% of my portfolio, as many of you that watch my videos know. Big proponent of REITs, but we've kind of been in that waiting period. And I haven't added to any REITs in some time now because we got that head fake, which many of you that watch this know that I wasn't really faked out from that. Anyone that was going in pricing in 6 interest rate cuts, as I put it with some of my calls with some of the students that are taking my 6-week investing course, I put it this way: is I said a lot of those people were sniffing glue. There's no way in heck that we're going to get 6 interest rate cuts. Those are the folks that are just looking for the perfect scenario. If you look at the data and you see where we're at in terms of not just where interest rates are right now, but look at inflation. They got into this game late. They're not going to leave this game early. And right now we have sticky inflation. A lot of folks are saying, oh, inflation's coming down. Okay, look at the comparables. You got to put things in relative terms. You got to look at the comparables. What are we comparing to? We're comparing to a year last year that saw inflation up 9%. If you look at food costs, if you want to look at energy costs, look at those over a 20 or a 24-month period. We're talking about up over 30% in energy, up over 35% in food costs. Inflation isn't coming down right now. It is very sticky, and the Fed sees exactly that. And investors that have been on here on this Dividend Power Hour and heard me talk about it, there's no way that did we ever talk about seeing 6 interest rate cuts. I talked about maybe having 3 if we're lucky. So that's kind of that base case that I'm still in the camp that maybe we'll get 3 because they don't want to stay too long. If you have rates up too high for too long, then you can start impacting the economy as a whole. We're trying to slow down the economy. Does it look like NVIDIA is being slowed down? For those of you that have seen the earnings today, don't think so. Does it look like many of these other S&P 500 companies have slowed down all that much? Doesn't appear so. So we're trying to get that down. We got unemployment at 3.7. They have plenty of firepower, the Fed. If the economy does start to tank and tank fast, plenty of firepower. They can start, cutting rates. But if they start doing it too early, you run the risk of what happening? Well, you have unemployment low, wages are hanging in there and creeping up. Well, now you have less of a borrowing rate now. Let's go out and start borrowing it. And if we have more money to spend, what happens? Spend, spend, spend. If we're spending more, we all learned it in 4th grade. Let's say it together. Supply and demand, folks. Supply and demand. And when we start buying things at no matter what the price is, prices got to increase, folks. So that's where it all comes back to with inflation. Inflation is sticky. They're not cutting rates. They weren't going to be cutting rates. No one that was truly looking at the data and looked and understood the data believed that interest rates were going to be cut here in this first meeting per se, or the first 2 meetings, I should say. So that rant is out of the way. The J's got, is that our sniffing glue one right there? I like that. Dividendology, guys. Look at this. He is in. Good to see you, my friend. Where we got? We got New York City is in the house. NVIDIA at 11.54. Probably will be there quite shortly. Bumped my contribution QQM and QGRW this week. Still focusing on SCHD. QQM is a good one, folks. If you guys are looking for that exposure to those big time technology companies and want to focus more on technology, then the triple Qs are a great way to go. And if you've seen a few of my videos, then you know that if you're doing options, which we got an options webinar coming up. If you guys are interested in options, we'll talk about that here in a second, is QQQ is the way to go. Hands down. If you want to do options, QQQ is the way to go. But if you're investing in the triple Qs for the long term, then QQM is the way to go. It's the same exact thing pretty much, lower expense fee. And if any of you are on this course right now, and my students out there that have worked with me one-on-one on my 6-week investing accelerated course, you know that we've gone through that expense fee slide there to show you just how much over a long period of time, how much high interest rate or high expense fees can eat into total returns. If you're paying a high expense fee, you dang near better be getting a better return on that money. QQQ is the same exact thing as QQQM, but if you're using options, it's a lot more liquid. That's the only reason you want to stick with the triple Qs there. So there we go there. What else we got here? Jeff is going to flip it on us and see them raising interest rates. There is some folks in the camp out there right now that believe we will have a second inflation issue coming up here. And if we do in fact see that, which it is sticky right now, then that is definitely not that, like, you could look at that and go, no, there's no way. That is not something that is completely out of left field there. Definitely a possibility, I should say. Inflation is in diminishing return mode. Slowly but surely diminishing, we should hope. So we'll see. What do you expect from SMCI? That is one that is just absolutely taken off, and it is going to take off tomorrow if the after hours remains set there. Super microcomputer up 8.5%. Pretty much, they were down 7% today practically, so they're going to erase those losses that they had today. Again, if you're connected to AI, you're going to be moving in the right direction, at least in the near term here, until this little bubble per se that some believe we're in pops here. So we got Rob Roos from Michigan in NYCB. Is NYCB going to quit the bleeding? So when it comes to banks, financials, you've heard me say it, not a big investor when it comes to that particular industry. I have Bank of America. If any of you are subscribed to the Investor's Edge, I show my entire portfolio down there. You can see there's over 14,000 folks that read our weekly newsletter. And if you're a subscriber to the Plus version, you see my entire portfolio. And you know that I have Bank of America, dividend growth stock, great financial, second largest bank in the U.S. And then I have SCHW there. So Charles Schwab, more on the investment broker side. And then I have one more small investment brokerage firm, T. Rowe Price. Those are really the three that I have when it comes to financials. So not looking for anything in that regional bank. There's a lot of messes that have been going on there. So it's hard to pick and choose. So that's one I'm definitely would take a pass on for my portfolio, I should say. All right. Shivi, should a long-term investor change the way they look at SCHD and JEPI? They haven't moved much recently. So when it comes to these, you just got to understand the weighting. They're two completely different ETFs. JEPI is going to be for strictly income-focused investors. So they're selling a lot of covered calls and utilizing derivatives, options per se, to generate a high premium. So it's not really a dividend that they're paying. It's part dividend, but mostly they're passing on a lot of those option premiums that they collect from selling those. So depending on how well they do with the option premiums, that's going to predicate, how well the distribution yield is. So don't expect much in terms of the overall share price growing when it comes to JEPI, because they're topped out. They can only go up so high because covered calls cap you out from moving higher. So it kind of just withers away over time from that standpoint there. SCHD, though, is the complete opposite. That one's going to give you the growth potential. That one's very broad, though. So right now, again, we're seeing NVIDIA move, Microsoft, and not lately, but NVIDIA up 40%, Meta having a fantastic year, pulling the market higher. It's broader than it was in 2023, which is a good thing. That'll benefit something like SCHD, but you're also getting the dividend side of things when it comes to SCHD. So with SCHD, you get dividend growth that's faster than most dividend growth ETFs that are out there. You get a higher yield than most high yield dividend ETFs that are out there. That's why this one just really checks off all the boxes for me. Looking for that diversification. It may not move right now because if the technology sector is moving, you got to know that SCHD, their fourth or fifth largest exposure segment is technology. So it's not a big weighting for them. It's only about 12%. But the big movers like QQQ, when technology goes, it's going to move. When XLK, it's going to go when technology goes. So you got to understand it's a great sidestep, a sidekick to S&P 500, to QQQ, something that's more overweight towards technology. Well, you want a lot more weighting in the other sectors as well to diversify your entire portfolio, I should say there. So I like SCHD, my third largest holding overall when it comes to my portfolio. But when it says not moving much lately, it's trading at a 52-week high. So we've been definitely moving. We were trading at $65 on Halloween last year, and we're now at 77. So it's definitely moved from that standpoint there. M Green bought some NVDA at $20 at each $20 interval that it went down. There you go. Just leverage your way down. Big news of Capital One buying Discover. Yep, that is one that I wanted to bring up in this week. And if you're one of those arbitrage type of investors that usually the stock doesn't go up to the buying price that that they're going to pay for Discover. But is this one that you truly believe that the government officials are going to sign off on? Do you believe that making a larger financial institution, Capital One, even larger? It's already one of the largest, but buying Discover is going to make it, obviously, it's not rocket science, that much bigger. So in that fact, is it something you believe? So if you're in the camp, which I'm in the camp that I don't believe it's going to go through, I don't have any position on it, first and foremost. That's my disclosure. But if you're one that doesn't believe that this is in fact going to go through, this is one you could utilize some options, some downside options, and really capitalize on. You're gonna have to do a lot longer dated because it's going to have to go through the entire process. But I think this is one that might not potentially not go through there. So, got the comments coming in all over here. What's up, Slim Futures? Good to see you. Highmark started to invest in VUG and VYM into my Roth, which is made up of mostly Vanguard, Wellington. I was wondering if these are both good complements there. So, yeah, I think both of them. I have VYM within my portfolio. Obviously, it's going to be more of your mature companies and, supposed to be higher yield. But again, SCHD usually has a higher dividend yield than that one. And then the VUG is going to give you much more of that growth aspect in terms of things, much more technology focused. So, they'll have some overlap, but not a ton. They both have two different strategies from that standpoint there. So awesome. Love all the questions, guys. I love the interaction. We got India in the house now too. Not once, not twice, not 3 times, but 4 times we got them in the house here. We got another one there, 5 times. So we got India in the house. We got Singapore. We got Germany, Sweden. I haven't seen my Denmark friends yet, so we'll wait for them. All right, let's jump back into the slide deck here and see what else is going on. So we went over the jobless claims. We went through earnings season. We touched on housing data. Before we jump into the next thing real quick, let me tell you about our fear gauge. Let's look at the fear gauge here, and I believe this number is going to go up, and we are probably going to creep further into the extreme greed fear factor here with how much NVIDIA is going to push the market up there. So definitely be mindful. Oh, we got Brazil in the house too. Definitely be mindful as you're putting new money to work right now that we are in these extreme greed levels. Look at that VIX. Is the VIX low? Is the VIX increasing? Something to kind of focus on in terms of volatility overall as well. So let me take a moment real quick to tell you about an upcoming workshop that I have going on here. So you've heard me talk about it a lot on these live shows. I've touched on it every once in a while within my regular videos. You see me touch on it on the Investor's Edge if you're signed up for our newsletter, over 14,000 people. If you are not yet, it's free to sign up down below. We do have an options workshop coming up. So if you're brand new to options and you've heard us talk about a lot about options in the past, we have a paid Discord where folks are coming in and we have made money we track it. You can go to joincfu.com and see every single month how we've made money. You can copy our trades right there. But if you're learning and truly want to understand what in the world are options, how can I utilize options, or maybe I've been dabbling in options for a while, this is the perfect workshop for you. We're going to learn and show you a lot of the strategies that I personally utilize to generate my goal of $5,000 per month in premiums. That when it comes to options, a lot of folks say that options are like gambling. Well, if that's the case, I'm the house, and the people buying the options, those are the gamblers. Who usually has the advantage? The house has the advantage. So I'm going to show you exactly how I do that with covered calls, with cash secured puts, with option spreads, both credit spreads and debit spreads. I'll show you exactly how to enter orders. I'll show you exactly what in the world do these terms mean? How can I utilize and leverage my actual portfolio right now to make even more income. If I want to buy a particular stock and I want to buy it at a lower price, what do? I sell a cash secured put. So that's me being patient, doing my due diligence ahead of time, knowing that I want to buy a stock at this particular level that's lower than today's stock price. I'll sell a cash secured put, collect a premium. If the stock doesn't go that low, I'll do it again, collect more and more premium every single time. And if it does, in fact, drop below that price, I will gladly buy that particular stock at that particular price. So you can do this with indexes, ETFs, individual stocks, whatever the case may be, you can utilize options for. So definitely, there's a link down in the description below. There's a special discount right now. Seats are limited. So make sure you check that out down below. It'll be on February 29th, 5 p.m. Pacific time, 8 p.m. Eastern time. So hopefully we'll see you there. Seats are limited. So definitely check that out down in the description below there at the conclusion of this workshop here. So let's head over and start looking at some earnings here. So let's make that a little bit bigger there. So let's look at NVIDIA. That's why we're here, right? We were here to talk about NVIDIA. So after hours right now, NVIDIA is up over 8%. So they reported and beat on pretty much every metric that you could think of. They beat on revenues. They beat on EPS. They beat on free cash flow. Their adjusted operating expenses came in below expectations. Their gaming revenue beat. Their data center revenue beat. They just blew it out. I mean, you're going to start seeing people that are going to start naming their kids Jensen just because of how much NVIDIA has made these people over the past 18 months here. So adjusted gross margins are forecast to be around 77%, plus or minus 50 basis points there. There's the adjusting operating expenses that I talked about, $2.5 billion. For the fourth quarter, NVIDIA earned adjusted EPS of $5.16 with revenues of $22.1 billion in revenue. Gaming revenue, as I mentioned, surged 56% year over year, coming in at $2.9 billion. Analysts were looking for 2.7. Boom, there's our beat. Let's look at data centers coming in at 18.4. What were analysts looking for? 17.2. Boom, that's a beat. All right, automotive revenues came in at $281 million. Professional visualization, it's a big one for me, rose 105% to $463. And total revenues, as we just saw, were 22.1. That was an increase of 265%. That is the definition there, folks, of a growth stock. Adjusted gross margins came in at 76.7. This was a concern last few earnings estimates that we had that came out. Nope, beat on that too. You could throw whatever you want. NVIDIA beat them. They are just fantastic. I put on... I was expecting the stock to fall down. I was ready. I spoke with a student that was in my session today. She was doing the same. We were ready to buy. We were like, oh, we're ready to buy some NVIDIA when it pulls back. It's going to pull back like 10, 15%. There's no way. They're set up for perfect expectations right now. There's no way that they're going to be able to pull this off. I mean, they didn't just meet. They beat easily there. So, I mean, it is just an unstoppable train right now. And it's one you just got to enjoy you got to try not to time the top, and you just got to enjoy the ride because they just keep proving many of us wrong. So great for all the NVIDIA investors out there. I hold a good little chunk of NVIDIA, so I'm along for the ride. Another one we saw was Home Depot. So Home Depot's been on a bit of a run. Had a bit of they were in a rut in 2023 or in 2024 now, Mark. But they have they're up 25% almost in the past year. You could see since October, pretty much Halloween of last year, they were down at $275, which was their 274 was their 52-week low. Just give them a few months and boom, they're already back up to a 52-week high there. So Home Depot's been fantastic. Let's look at their earnings from a few days ago, or yesterday actually. GAAP EPS of $2.82. They beat on the bottom. Revenues came in at just shy of $35 billion, actually a decline year over year, so decline of 2.9%, but that came in slightly higher than analyst expectations, so they beat by $120 million there. Comp sales for the fourth quarter of fiscal 2023 decreased by 3.5%. Comp sales in the U.S. decreased by 4%. So let's look at the outlook here. Total sales growth is expected to be 1%. They're getting that extra week in this fiscal year. So 53rd extra week here, projected to add an extra $2.3 billion in sales. Comp sales are expected to decline by 1% over the 1 year period. They're going to add 12 new stores, a little bit slower on growth there. Gross margins 33.9, operating margin at 14% there. So interesting look at Home Depot. You could see the wild ride yesterday. We had stocks fall. The stock initially fell and then popped quickly after that, regaining all of those quick losses. So we already talked a little bit more about what they did on a regular basis. What do we also get from Home Depot? They're known as a dividend growth stock. So they've been increasing their dividend at an average annual rate of 15%. However, 2023 was rough. 2022 isn't off to that, or 2024 isn't off to as great of a start so far. So what do? We get a 8% dividend hike. That's a solid hike, half of what they usually do. Something that was expected, though, just because the cash flows have come down a little bit from that standpoint. Their sales are a little bit lower. We don't have as much to pass on, but we're still going to increase our regular payout from that standpoint. So that was a good thing for Home Depot investors out there. All right. Do we have any Home Depot investors out there? What were your thoughts? Are you still invested in Home Depot? Are you looking to get out of Home Depot? Are you looking to, maybe you're not in Home Depot and looking to get in Home Depot? All right, what else we got here? We got Brazil's in the house. Apparently the J is faded. Like and subscribe. Thank you, the J. Magic Man, sorry, just got on the call. Are you in NVIDIA? If so, what is your objective? I bought a small amount at 680. Don't want to overstay my welcome. Well, we just talked about that. Hopefully you saw that part. What do you think about Uber? That was a good question. So Uber, and I don't know if any of you guys saw my latest release. I went over the 11 different sectors within the S&P 500 and showed you specific, if you're looking to increase your exposure to a specific sector, when you look at your overall portfolio, you're constructing your portfolio, you want to have a diversified portfolio. There's a lot of great, well-diversified ETFs that are out there, but sometimes you're like, hey, I just want an ETF that focuses just on technology, just on materials, just on industrials. Well, industrials is one of the ones I went over. I don't have a position right now. I have some options with Uber, but I don't have a position in the industrial REIT, but there's one that has Uber at the top of the list there. So, I like Uber long-term. I like what the CEO is doing there. He's really revamped the company. It's still the same company, but in terms of the internals, the true, the free cash flow that's generating, the positive net income that the company has, he's really turned that around in terms of operating efficiency, which is key when looking at a business. You want to be able to separate a business and a stock from the other. I love Apple. I love all of their products. Not crazy about the stock, as many of you know on this channel right now. I have Apple exposure, not something I'm adding to right now, though. Uber's a great company, though, that's really been turned around. All right, Michael Anthony. I'm not in Home Depot, but when should I buy Home Depot at what price? Well, we should have bought it probably a year ago. It'd be up 25% there. So Home Depot, when I last looked, and I haven't updated my valuation metrics right now, something that we'll be doing this week for Investors Edge Plus subscribers, because we put out our earnings recap. We give you a snapshot of what the company did and everything that week. So we'll get an updated one out there for everyone to kind of see what's going on. And that'll give me a chance as well to show you guys what the latest valuation is. So we're doing a write-up right now for Investors Premium subscribers on PepsiCo. So we go through each week. You get a deep dive on an individual stock. This week, one of the prior weeks was NVIDIA. This week happens to be PepsiCo. So let me see if I could share with you guys, since we're moving on to Walmart now. Let me see if I can share something with you guys to show you what type of stuff you get when it comes to Investors Edge Plus. So here's kind of one of the cool images that we put together when it comes to Investors Edge Plus. All the different stocks that we're going through in terms of our Edge report that only goes to premium subscribers. We put this together just to give you a visual. I'm a visual learner myself, so we put these together for Investors Edge Plus subscribers here, so we can see a snapshot. We're going through Walmart right now. Instead of going through and clicking on all those different articles that are out there, we do all the legwork for you. So we could see EPS compared to the estimate, where they at. Boom, there was a beat there. We put in revenues. Where was the estimate at? Boom, it was a beat there. What are some key takeaways from the report in the readings? Either we get this from the press release, we go through the 10Q or the 10K, or we listen to the earnings call as well. That's after the release of the report there. So we could see revenues of 160.8 billion was up 5.2% year over year. Net income was 453 million compared to 1.8 billion loss in Q3 of 2022. Operating income was 6.2 billion. This was their Q3 2023 earnings here. Gross margins 24%. That was up 32 basis points year over year. Comp sales came in at 4.7. That was down 450 basis points. But again, we're going to look at that here in a second in the charts. It was the year that they're comparing to was one of their best comp sales there in terms of comparable store sales. And for those of you that are new to looking at retail, you do the same thing for Home Depot, Walmart, Target, Starbucks, McDonald's. You want to look at comparable store sales. You know, a lot of these companies add new stores all the time. So by adding new stores, that's automatically going to inflate your revenue number. So what comp sales does is says, nope, we're gonna bundle up stores that have been open for at least 12 months from last year and at least 12 months from this year. So it's apples to apples. We don't add in any of the new stores, so we can really see, okay, what is the comp here in terms of that. So revenues for those stores were up 4.7%. And then when you're looking at these types of stores, inventory is a big thing that you want to hone in on there. So we have that for Walmart. You could see one for, let me show you the Home Depot one that we just looked at so that you guys can see this one as well. Boom, there's Home Depot. So we just went over Home Depot. We saw the EPS, the revenue, some of the tidbits the takeaways from the report, some guidance stuff that we have there. So these are the types of things that we go to, and then we do a little write-up below. So for the visual learners, you get to see this. For the people that do the write-up and like to read a lot more details on all of this stuff, you're going to see that written up in our report where this image is going to be at as well. So if you're interested in the Investor's Edge, there's a free version as well as a plus version. You can check out the link down in the description below. So with that being said, let's keep rolling here on earnings. So since we have a lot of earnings going on, we just jumped into Walmart. So let's keep looking at Walmart. Any of you out there own any Walmart? So we saw our non-GAAP EPS of $1.80 that beat, and then we saw our revenue beat by $4.1 billion. So this company is, you got Walmart and you got Target. Very similar in terms of companies, complete opposite directions in trajectory. Target's been a one-way street down. Walmart has just been taking advantage and increasing. Now, the difference comes into food now. That I obviously know that is a big impact. Is Walmart one of the largest, not the largest grocer here in the U.S. Target doesn't really have, they're starting to have some groceries, nowhere near the size of Walmart there. So definitely a good one there. All right, who else? We got John in the house. John, good to see you. I've missed the boat up to now on crowd. Any thoughts? Just did a cash secured put, John. And I know we have our investors, it's accelerator course tomorrow with you. So session 2 with John. I'll kind of go through the setup on that one. So today sold a cash secured put. Looks like that's going to pretty much pay out fully in one day in just 24 hours there. So we'll make a couple $100 on that trade there. And that was just predicated on a good NVDA report. The whole NVIDIA is pulling up all of those technology, AI related stocks. So, I have CrowdStrike, would like to buy more, not at the current valuation, especially what tomorrow's valuation is going to be. Let's take a look real quick. Let's see what Crowd is up after hours now. Again, they haven't reported anything right now, up 3% just from that right there. So I think I sold mine right around 230. That was me saying I would like to buy CrowdStrike down at 230. Got me a couple $100 just for an option contract right there. Obviously, it's not going to follow 230. We'll get that money, cash out, and we'll do it again. So that's kind of the process with that options. Again, if you are interested, we got that options webinar coming up February 29th. Limited spots, link down below. Covered calls, cash secured puts, credit spreads, debit spreads. If you want to get a little bit more risky, we'll talk about what buying and selling puts are, buying and selling calls as well. Go through all of it so that even if you are brand new to options, or if you've been dabbling with options for a few years, going to be a perfect course for you there as we'll be going through it all. We'll have a Q&A session. I'll be bringing on one of my dear friends that have been doing options much longer than me go through some Q&A, talk about some other things as well as their strategy as it pertains to options, looking at charts, things like that. So you can ask away. Very intimate group. So definitely grab your spot as soon as you can there. I do like Target. So don't get that misleading. It's just Walmart has been outpacing them. They're running a much faster, I should say. They had the 8-second pit stop. Target had engine failure, and they're trying to put in a new engine there. So that's for all the NASCAR Daytona 500 fans that are out there right there. But when it comes to Target, they're turning things around. They have a great management team that can turn things around. So if you're patient, you have a long-term viewpoint. They have a good dividend, a reliable dividend. They just need to turn around some of those internals, get rid of some of the political stuff, get back to focusing on what they do best. There's a consumer that's still rather healthy. So if we can get back, they just haven't been buying clothes. A lot more of, as you could see, have been buying groceries, and they'll be going to Walmart to buy their groceries. The other thing with Walmart that we should bring up here is they made a little acquisition recently. Walmart bought Vizio. So for any of you that have Vizio, any of you got Vizio TVs out there, they are now owned by Walmart, bought them for $2.3 billion. So there were some rumblings for a while that I heard some reports of Walmart was actually looking to buy the likes of Roku. Either Roku wasn't looking to sell, maybe the price wasn't right. So Walmart moved on and they went over here and bought Vizio, $2.3 billion. So it's just another way for them to reach a different consumer. I was going to say investor, but attract a different type of consumer. And what is the other thing that let me get back to here on Walmart. Here it is. So we looked at comp sales. Those rose 4%. Analysts were only looking for 3.2%. So that was a big beat there. Transactions were up 4.3%. So when it comes to Starbucks, Home Depot, Walmart, Target, there's things you want to look at. You want to look at comp sales. You want to look at average number of transactions year over year. And you want to look at average ticket. So if average ticket is up and transaction number is down, that means you're having less demand. You have less people coming to your store and buying things. And that tells us that, okay, maybe they did some price hikes, and that's really what's driving things right now. We want to see traffic. We want to see the number of transactions up. If you can get both up, that's even better there. So when we can look at Walmart by the numbers here, let me see if I can find it. Here it is. So here's Walmart. Here's their Q4 2024. We got up 3.9% US comp sales, transactions up 4.3%. So they had more transactions than a year ago. Ticket was pretty much even. And then Walmart also has fuel. So if you went by any of their Sam's Clubs before, because Walmart owns Sam's Club as well, they're kind of like Costco. They also have cheaper gas there. So gas can be a lot more volatile. So excluding gas, comp sales were at 4%. You could see Sam's Club US transactions, and then you could see Sam's Club's average ticket there. So average ticket kind of stayed the same. So no real impact there with pricing. No larger, if you go to Home Depot, they're big on going and buying a washing machine, going and buying a dryer, going and buying a refrigerator, things like that. That could increase your overall average ticket. Here we're seeing the number of transactions up. That's definitely a positive sign when it comes to Walmart. The other thing that I wanted to bring to your guys' attention outside of Vizio, if I could find it again, there we go. Walmart's global, this is something that a lot of folks don't even think of. Walmart's global advertising business grew by 33% last quarter. 33% advertising business when it comes to Walmart. So you got Amazon, huge on advertising now, a retailer. You got Walmart, a retailer, growing its advertising. This kind of makes you wonder about the other one. Is Target going to show something with advertising? Is Costco going to start showing? I mean, I think Costco's got a very loyal customer base from that standpoint. I think their online is a little bit archaic and they can make some improvements there, but maybe advertising could be an area of improvement too. Something to think about for all those Costco lovers out there. There's John mentioning, won't see Vizio at Costco anymore. All righty. I think I missed part of your scene. Where can I sign up for the webinar? Should be down in the link down in the description below. There's one there for our options webinar coming up February 29th. I know we've already had about 10 people are already in on that. So that is fantastic. We've had some that are on the email list have already signed up now. So definitely take advantage of that and save your spot there. So we had Home Depot had a 8% dividend hike. We also had Walmart with a 9% dividend hike. Remember, Walmart, as of tomorrow, if you guys are watching this live right now, tomorrow, February 22nd, you're going to see that stock split that was announced back in January. 4 shares of Walmart. It'll be a 3-to-1 stock split. No change in the market cap. They're just going to have 3 more times the amount of shares out there, and the price will be cut by 3 times there as well. So everything will be adjusted. You're not going to get a deal or anything like that. It's a 3-to-1 stock split there, and you will see a 9% dividend hike for shares of Walmart. All right. Last but certainly not least here, Palo Alto Networks, a Jim Cramer favorite, down nearly 30% on the day. Actually reported relatively decent earnings. Again, earnings are a way to look back. What did you do for me the past 3 quarters? Wasn't all that bad when we look at the overall earnings right here. So if we see Palo Alto non-GAAP earnings, $1.46, beat by 16 cents right there. Solid beat. Revenues came in at $1.98 billion. Pretty much in line. They scooted by with a beat of $10 million there. I like how we say like 10 million bucks is something small or something like that. Remaining performance obligations grew 22% year over year. Kind of a look back on more work that they have deals for and still need to make due on. So 10.8 billion. Their operating margin grew by 580 basis points. So we beat on the top line. Our operating efficiency grew. We got better with that. Our bottom line beat there as well. So beat. I mean, a triple beat, usually pretty good. The only thing that can mess it up is forward guidance. If you're a company that gives forward guidance, that can mess it up from that standpoint there. Total billings came in for Q3, the next quarter out, I should say, 2.3 billion to 2.35. So that's the range there. That's year-over-year growth of just 2 to 4%. This is a company that was growing much faster. Look at revenues up here that they just reported, 19.3% in terms of year-over-year revenues. This is going to be billings. From that standpoint, just 2 to 4% increase. Revenues 13 to 15. So it's coming off the highs of what we just saw of 19.3, and then diluted GAAP. And then you can look at overall. So this is pretty much the year, complete year on what things are doing. And we can see total billings coming in at 10.10 to 10.20, representing year-over-year growth of 10 to 11%. So total revenue at $795 and $8 billion, representing year-over-year growth of 15% overall. Those all came in at the low end of what they had given guidance before. So investors said, hold the phone here. I think the management team used the word fatigue. There's a fatigue out there from customers on, they can't just keep increasing and putting out more and more money towards these products. There's a bit of fatigue. Investors definitely didn't like that word that was in there. And it's kind of showing the fatigue within their guidance as well. Okay, we're starting to see a definite pullback on spending when it comes to Palo Alto here. So my rule of thumb when it comes to these big time stock moves, a stock down 30% is definitely a huge move from that standpoint there. I usually have at least a 3-day rule. Let's let things kind of play out, because tomorrow NVIDIA is going to impact it. So people will just be investing blindly tomorrow because of just what one company did. So that's important to know that as well. And, we want to, I like to let things pan out. So maybe we go up 2 to 3% tomorrow for Palo Alto Networks, but then investors turn their attention back and say, well, hold the phone here. Wait a second. Let's not forget what Palo Alto just did. We're paying a high multiple. And when you pay for a high multiple, you expect more growth. Well, they're projecting much lower growth now. So maybe that high multiple isn't really what it's meant out to be right now. So definitely something to look out for there. Magic Man options webinar, link down in the description below. It should be there. If it's not, let me know, and we will get that there out to you as well, so you guys can get signed up. So some people are going through. I see the signups coming, so it's working for some folks there. So hopefully it works for you. All right, so let's turn our attention now, really quickly, while we close this, to kind of show you where has earnings been so far, because we're pretty much through the tail end, definitely after last week and this week, I should say, of what earnings is going to be doing. So here is the fact set that put out, every week or so in terms of overall S&P 500. So when I see on that first tab what my forward PE ratio is, this is usually where I'm getting it. You can see it right there. So here's our earnings scorecard for Q4. We've had a roughly 80%. We've actually had more than 80% now that NVIDIA has reported actual results. 75% of companies have reported positive EPS surprises. 65% have reported positive revenue surprises. So overall, pretty decent from that standpoint there. Let's look at EPS now. EPS earnings growth rate has been about 3.2% on the quarter. If 3.2 is the actual growth rate for the quarter, it would mark the second straight quarter that the index has reported earnings growth. So again, potentially, are we bypassing what a lot believe that we may be falling into recession? This isn't showing it. Company earnings are not showing it so far. In terms of guidance, 59 companies have issued negative EPS guidance, with 26 companies issuing positive EPS guidance. Again, not all companies show earnings out there, so take that with a grain of salt. And lastly, the Fed. So the next Fed meeting we got coming up, we had Fed meeting minutes come out today where they did talk a lot about delays. There's not a lot of Fed officials out there that are ready to cut rates anytime soon. The next meeting is March 20th. And right now, rates are at a range of 5.25 to 5.5. That looks to be the large majority, nearly 94% of folks that take this Fed survey here believe that rates are going to stay unchanged from that standpoint there. Moving forward, though, into the next meeting, which will be May 1st, that's likely, okay, nearly 30% believe we'll have a rate cut, but still the large majority, 70+%, believe that rates are going to stay unchanged through May, and not until June do things start to sway. So that's when the majority, just 52% still, believe we will finally start getting a 25 basis rate cut there. So not sure where you're at in the realm of overall rate cuts from that standpoint there, but you guys have heard my rant saying that I don't think we're getting rate cuts anytime soon. I was on the record. That's why we got the live shows. You can go back and watch them and see what the record was to see where I stood in terms of rate cuts. Things like REITs, things like utilities, those more defensive sectors that are higher yield and stuff like that, they're not going to get that tailwind until we do, in fact, start getting those rate cuts. So there was a lot of the talk about 6 rate cuts. We saw REITs start to move. They have come back down to earth from that standpoint. So for the REIT investors out there, I think it's being a little bit more patient. Let us get closer and let those stocks come in a little bit more. And maybe if you do want to buy, just nibble at them. Right now, I'm not backing the truck up or anything like that on any particular REITs out there, even though there's a lot of high quality, very cheap REITs. I mean, you look at Realty Income right now. Normally, I was looking at it with a student just last night. We were looking at Realty Income valuation. Normally trades at 19 times on a AFFO multiple. Right now, you can get it for about 12, below 13 times for a REIT that normally trades at 19. Maybe it's not going to trade at 19 again. Maybe it's going to trade at 17, which is the normal range when it comes to net lease REITs in the retail sector. Well, 12 and 17 is still a big disconnect from that standpoint, and there's a lot of headway up when it comes to that. Doesn't mean it's going to jump up to 70 right away. Could take 6 months, and that's why we just nibble why it's down. For a lot of us long-term investors, use this period as wealth accumulation, because you're going to look back. Just look at NVIDIA. What do we all say? Well, I wish I invested in NVIDIA 18 months ago. That's what we're going to say eventually about a lot of these other stocks that are much lower. Now, they're not going to jump up 300%, but that's what we're going to be saying. Man, I wish I added even more and stuff like that. Continue to do your due diligence out there when it comes to overall. So what questions do we have out there from folks with the few minutes that we do have left, with the with how much my voice has left and stuff like that? What are your views on Snow and Spotify? So not going to act like I look into these all that closely. I follow them. I have had Spotify with options in and out for a while. Don't own any positions right now, but I meant to have some call option on because I was looking for a positive report with the last earnings call with Spotify, and ran into an issue having to do stuff for my son's school. And then lo and behold, I'm like, oh shoot, I didn't do a Spotify, and boom, the stock popped, and I was like hitting myself from that standpoint there. So you can't win them all. Didn't lose that one, just missed on an opportunity. But Spotify is one that, I've been a subscriber to Spotify since the beginning, and I think I've had one price increase, which is the one I recently got there. So I was wondering just for a while, I'm like, how in the world can they not hike prices at all from that standpoint there? So I think there's still a lot of things I think it's a long term. Maybe they'll get scooped up by a larger player. We'll have to see there from that standpoint, but definitely, I love the product overall, but can't really speak to valuation. Don't follow Snow all that closely from that standpoint there. Mm. It's investors not understanding the industries they invest in. Networking equipment isn't something that companies buy. It's cyclical, just like chip stocks. I'm buying Cisco on a dip of similar guidance. Networking equipment gets purchased when it's time for companies to refresh their equipment. That'd be similar to something like an ASML as well. They create a lot of the equipment for a lot of these AI chip type companies, what they use to manufacturers, I should say. James Threadgill, why does SPG keep going up when most REITs are going down? Some of them are just better than others, but they had pretty decent results overall. They were in the dumps in 2022, so it's relative from that standpoint there. So it is people looking to put money back into work. As we expect interest rates to come down, you're going to see a lot of folks that are in these high yield savings accounts, short-term bonds, start saying, okay, well, that has come down from 5.5%. Now I'm only earning 3.5%. Okay, maybe that 5.5% interest rate or dividend yield with potential upside looks a little bit more intriguing than it did when I had 5.5% high yield savings account with no risk. So we'll slowly start to see as we creep closer to Fed cut time. That's what's going to happen is we're going to see a transition of all that money that's been on the sideline, and those high yield money market type accounts are going to be heading towards things like REITs there. So SPG has just been a fantastic company from that standpoint there. Not sure there's any, earth-shattering news overall, unless I've missed something. I don't think they've made any like acquisitions or anything like that. It's been a few weeks since their earnings report. I know they continue to increase their dividend. They had the big buyback announcement that they had as well, so that could be spurring some buying there, but not something I'm going to complain about. I'm an long-term SPG. I think my average cost is right around mid $60 range, somewhere around there when it comes to SPG. All righty, what else we got here? What do you think about TTD and SoFi? SoFi is a great one to, if once you guys come to the options webinar, if you're looking to, there's some folks that say, I'm going to go do some practice options, but there's a ton of platforms you can do that. And some folks say, no, I just want to learn, I've learned the material now from the options webinar. I want to try a few ones without risking too much. SoFi is a great one to do that on. It's a low cost. It has some good liquidity there in terms of options, contracts and stuff. SoFi, Palantir are two of the good ones to definitely practice on. Trade Desk is definitely a stock I like. I believe in digital advertising coming back a lot. So that is one that I had some cash secured puts on. Stock fell, so I had to buy 100 shares of Trade Desk. What did I do? I used what's called the wheel strategy. That's where I sold the cash secured put. I had to buy the stock, so I bought the stock at a price. And then I turned around and sold, since I had 100 shares, sold a covered call. So now I've collected premium, bought the stock, collected premium again, and sold the stock at a higher price than where I bought it. That's the wheel strategy that you can do when it comes to options. It can be quite lucrative from that standpoint there. That's one there that I've done at Trade Desk, but it's also a position that I wouldn't mind. If had they not got called away after I bought them, I would have been completely fine with that, because I like what Trade Desk. I like Trade Desk. I like the Metas. I like the Googles there from digital advertising. Now we're seeing it from Walmart too, as I spoke about as well. John's got a question here. Feels like Vici could be the one that could pop from what you just mentioned about wanting more. Vici is one that I don't know if we spoke about it last week or not, John, in our session, but Vici is my top REIT holding, as you know, being a premium Investor's Edge subscriber. And it's one that I like. It's only been on the market for about 5-6 years, so about a handful of years. A lot of people are still understanding it, but the premium that they pay, or lack of premium right there, trading at 13, 14 times, normally much higher than that. I believe they should be higher than a net lease REIT like Realty Income, just because of what they do. They have high quality, the highest quality operators out there. Just look at their assets: Caesar's Palace, MGM Grand, the Mirage, Mandalay Bay, Luxor, Park MGM, New York, Excalibur. I mean, you walk down the Las Vegas Strip, tell me the last time you saw an open casino, just a vacant building right there on the Las Vegas Strip. You don't. I haven't been to Vegas in 5 years, so maybe there is, but those are high quality assets with high quality operators there, and folks love to gamble. It's kind of like, there's two things really, folks love to gamble, and they love to hoard things here in the U.S. That's why I think self storage is always a good one to be. Rob, thanks for becoming a YouTube member there. Truly appreciate that. Philippe Rodriguez, what do you think of Broadcom and Altria Group? So, two completely different types of companies. You got one in Altria Group, very, very mature, very old company, a dividend king, been paying a dividend for well over 50 consecutive years, a growing dividend, I should say. EPS growth, though, low, if possible, mid, but mostly low single digits. So really more of an income play at this point. So again, you want to look at total return, though. The dividend looks great, but if the stock keeps kind of falling, I have a small position in Altria Group from that standpoint there. But overall, it's not something that I'm looking to necessarily add to. Broadcom, on the other hand, I have a decent sized position in, and it's just one that's been skyrocketing. I haven't looked at actually that one since NVDA reported. Let's see if Broadcom's getting any pull up on the after hours there. Yeah, up 3% after hours. So it'll have a good day there tomorrow. Not as great of a valuation as it was a while back. So probably one that I'm just going to sit tight with. Not one I'm going to sell, but definitely one I'm just sitting tight with to see if it comes back down anytime soon. When do you think NVIDIA will do a split? That's anyone's guess from that standpoint there. So, it could be definitely soon. Anytime you get up past that $500 range, it's definitely something to think about. Look at Broadcom. Broadcom's at over $1,200 per share. So that's definitely one that could be due for a sizable split here coming soon. James said casinos are like Starbucks. They're always busy. Definitely. Go Starbucks. What else do we got? I think I just touched on that one with Realty Income. Definitely a cheap price. Do I think it's going to go anywhere soon? Not necessarily, unless we get some news that the Fed is ready to start cutting rates. But that's why I think now is just that accumulation phase. You don't need to back the truck up, but maybe every month, every few weeks or month, or whatever it may be, whenever you want to buy, just nibble at these high quality positions that are low valuations. All right, I'll take one more here. Penn, not really familiar with, or ELF. Is ticker symbol NVOS heavily shorted? And do you think, not one I'm familiar with either, NVO? I don't see the short interest there, but it's a very, I don't look at penny stock, so it's trading at 76 cents, not a stock that I look at there. So small caps probably as low as I go, but I usually just invest in IWM. I'm usually looking for mid cap, large cap, mega cap type companies that are well proven. I know what their business model is. I see the trend in their financials, not more. That's going to be more of a guessing game. We were just talking about casinos. That's what a 76 cents type stock is going to be, is more of a casino from that standpoint there. So awesome. Well, thank you guys for joining me today. And if you missed it, the announcement there, we have an options workshop February 29th there. We'll be starting at 8 p.m. Eastern. Limited number of seats. Link is down in the description below, so make sure you grab that. Be a discount for those folks that are looking to jump in right now, pay that upfront cost, and get you a seat there. You're going to get the recording overall, the slide deck that we go through. Again, we're going to be going through this, understanding options, cash secured puts, covered calls, option spreads, both credit, debit spreads. We'll have a Q&A section with an expert, another expert trader coming on, where you can ask questions back and forth and understand everything about options 101 to get you started. Again, it's all the tools that I utilize to generate $5,000 in monthly income when it comes there. So thank you guys so much for joining me today on the Dividend Power Hour. We covered a lot, and hopefully cheers to all of you NVIDIA investors out there. Hope you guys all have a fantastic day tomorrow. And keep investing, keep building that dividend snowball, and we'll see you in the next one, folks. Take care. Bye-bye.